Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, we focus on avoid keeping idle cash as inflation rate stays high. Last week, the National Bureau of Statistics released the Consumer Price Index report for November 2023. The Consumer Price Index is used to calculate inflation as it measures the average change over time in the prices of goods and services consumed by people for day-to-day living. The report revealed that inflation increased to 28.2% year-on-year in November 2023, its highest level since September 2005, from 27.3% year-on-year in October 2023. On a month-on-month basis, inflation rose to 2.09% versus 1.73% in October 2023, suggesting that inflationary pressures remain strong. This marks the 11th consecutive increase in the inflation rate due to high money supply, devaluation of the currency, low food harvest, and high cost of doing business. Food inflation, which makes up over 50% of the Consumer Price Index basket, reached 32.8% year-on-year, up from 31.5% in October 2023. Meanwhile, core inflation, which removes the impact of farm produce and energy, dropped marginally to 22.4% year-on-year from 22.6% year-on-year in October 2023. The relative stability of the naira in the parallel market is the major contributing factor to the moderation in core inflation. To us, we think inflation will remain elevated in the coming months due to the festive season and low harvest. When inflation continues to rise, it becomes essential for investors to seek returns or yields that match or exceed the inflation rate. At the minimum, investors should bridge the inflation gap rather than keep idle funds and earn zero returns. This is because inflation erodes the purchasing power of money over time. With yields in the fixed income space remaining depressed and at odds with the monetary policy rate, investors need to consider investing in high-yield fixed income investments. This includes commercial papers, bank placements, high-yielding savings accounts, and FGN savings bonds to offset the impact of inflation on your investments. In other words, don't let your funds sit idle in a bank account, as they will lose value in real terms due to inflation. Suppose you have 1 million naira in your bank account in the last year. It is now worth 717,996 naira in real terms, resulting in a loss of 282,001 naira in purchasing power. Investing in a high-yielding instrument that offers 18% per annum can reduce the loss in your purchasing power by 180,000 naira. That's quite significant and can make a significant difference in your investment portfolio. It is important to note that Ponzi schemes are prevalent in periods of high inflation and low interest rates. Hence, investors should be wary of investment with interest rates significantly higher than or close to the current inflation rate. Before investing, conduct your due diligence on the firm you are investing with and the investment product being sold to you. Ensure the firm is regulated, run by people of great integrity, and has existed for a while. All this will minimize your risk. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-8246-3747. Stay blessed.